So as big tech ramps up its spend on AI and their stocks hit record highs, are valuations getting a little worrisome? Let's ask NYU Stern School of Business professor Aswath Damodaran. It's great to have you back on. So are they? Are they getting worrisome to you, these valuations, as we make new record highs here in the session?
It's not just tech, right? Stocks collectively are trading at prices that I think, I mean, they're richly priced. That's the only way to describe it. I'm not going to use the B word, the bubble word, because that suggests that somehow the prices have nothing to do with earnings. Clearly, earnings have held up. 75% of companies reporting this year have reported better than expected earnings. So I think the market is being held afloat by the earnings numbers. And as long as the earnings numbers keep coming in, there is no catalyst for an adjustment. But I think that, it's not just big tech, it's not just tech, it's collectively all stocks.
But what about big tech in particular? NVIDIA is up another almost 4% today off this Intel deal. The market does continue to be carried by some of these mega cap tech stars.
I think NVIDIA's had some ups and downs in the last few weeks. I mean, there was a brief period where Oracle pushed itself up to the front. My guess is in the coming months and years, you're going to see more companies from the product and service space, not the architecture space, elbow their way to the front. Because if you look at every big boom going back 4 decades, initially the architecture companies are the beneficiaries. Cisco during the dot-com boom. Eventually, though, the biggest winner is not one of the architecture companies, it's one of the product and service companies. And Oracle, Palantir, Microsoft, Meta, they all want to be there. And I think it'll be interesting to see which of those companies ends up being the winner, if any of them. It could be a company that's not listed there yet.
Which one interests you more? The hyperscalers that you're talking about, the software players that are in AI like a Palantir, or the semiconductors?
I'll tell you, without the product and services, the hyperscalers, the architecture companies cannot survive, right? I mean, you need the revenues, the earnings, and the cash flows coming from the products you produce. I mean, you're just off that clip on Microsoft. Microsoft spends $100 billion in AI architecture. It needs about $300 billion in revenues from AI products and services to cover that cost. So if you extend that across the market, you're talking about a market that's building in an expectation of $3 to $4 trillion in revenues from AI products and services. Right now, I don't see the numbers there, but that's what I'm watching for. Which of these companies is going to be able to elbow its way to the front and be able to get that kind of revenue from its products and services?
I think in your own account, you own a lot of these stocks, right? You like a lot of the Mag 7, except Tesla?
Tesla, and it's not because I don't like the company. I like the company. If there's any company where a CEO can reframe an electric car company into a robotics company, well, Elon Musk is that. I think my concern with Tesla has become a political stock, and I'm terrible at politics. I don't want to have investments there. I'm trying to figure out what the politics of the moment will look like. So my reason for selling Tesla was not because I don't like the company, but because I don't want my investments in politics to mix together. But I do own the other 6. I mean, I own half of the NVIDIA that I owned a year ago, and I'm okay with that, even though it's gone up, because I think it is so richly priced that I'd rather have my money in Intel than in NVIDIA. And actually, my Intel investment's done better since September of last year than my NVIDIA investment.
Yeah, Intel's caught a nice wave here. And I'm not sure Tesla's political anymore, but Aswath, is there any stock or sector that looks particularly mispriced to you right now?
I think they're all, I mean, there are no obviously cheap sectors. I mean, you can point to sectors that trade at lower multiples of earnings. Relative to their own history, though, every sector is trading pretty much at a premium over its historical pricing. I think the energy might be the one outlier, but even there are good reasons for why we're seeing what we're seeing. But I think if you look at every sector, there are no sectors. We look at a sector and say, that's a discount on what I'd have got this sector for 10 years ago, 20 years ago.
Which would be a bigger factor for valuations right now? If the Fed doesn't cut as much as the market thinks, if inflation maybe firms up more than the market thinks, if the economy does better, what would be the big swing factor?
I don't think the Fed has any play in this. I mean, I think much as we like to think the Fed is going to drive rates, rates are going to have a mind of their own. I mean, it's interesting. The Fed cut rate, the Fed funds rate by 25 basis points. You look at the Treasury markets, basically they're demand and supply driving those markets. I think ultimately what happens to rates is going to be determined by more by what happens to inflation in the real economy, rather than whether the Fed cut 3 times, 4 times, or 6 times. And that's what I'm going to keep my eyes on.
Yeah, we are seeing higher yields globally today. Aswath Damodaran, thank you very much for joining us.